Today we're taking a closer look at the Russian economy in light of recently released services sector data, ties with Ukraine's debt settlement, and of course, the tumbling oil prices. So joining me, Sam Meredith, is Chief Economist from MNI Indicators, Philip Uglow. Firstly, activity in Russia's service sector fell in August, with Markets Purchasing Managers Index now at 49.1, which is a latest sign that overall economic conditions remain weak. What are the underlying factors causing this contraction in the sector?
But if we look at the services sector overall, it's not surprising to see that we've got weakness there across sort of all survey evidence and the official data as well. Apart from the deluge of bad news that have hit the Russian economy over the past couple of years from oil prices, which will filter all the way through the economy from manufacturing to service sector firms. If you look at the latest data, we've got retail sales down around about 10% on the year, consumer spending being hit very hard. We've got car sales down 30%, real wages down around about 9% on the year due to the high level of inflation. And that's really hitting the consumer, and that's hitting service sector companies as well.
Well, you've mentioned the price of crude oil already, and arguably Russia has been hurt the most from tumbling oil prices, so the outlook for the economy is a major concern. Without the artificial support of high oil and gas prices, just how troubling is Russia's long-term outlook?
Well, the continued low level of crude oil prices and gas prices as well, and the recent fall we've had in oil prices as well to a new recent low, that is very damaging to the Russian economy. Oil is obviously critical to the Russian economy. It's a petro economy essentially. So the future of where oil goes from here is very critical to the long-term outlook for Russia. I think that we may well see some pullback in oil prices, or some comeback in oil prices, I should say, then pushing up slightly over the medium term. I think that's likely. I think maybe we've gone a little bit too low here. But it's difficult to see them going back to the levels that we saw a number of years ago when the Chinese economy was racing away. I don't think we're going to see another sort of Chinese phenomenon happening. So I think we're looking at a world with lower oil prices. And that is particularly damaging to Russia over the long term as well. The one thing that Russia needs to do and has tried to do to some extent in the past and in the recent past as well is to move away from being so dependent on oil and to move into other sectors such as a resurgence in manufacturing, high-tech manufacturing, for instance. But that's very much a long process, and it's something that's not going to happen overnight. So, yeah, it's difficult to see at the moment. The long-term prospects for Russia are not looking particularly good with the oil price at this level, and it's difficult to see the oil price rising significantly from here anytime soon.
Finance Minister Anton Siluanov recently reiterated that Russia would not participate in the restructuring of Ukraine's debt settlement. Though, with Kiev owing $3 billion in euro bonds to Russia in December, is there a growing concern that Ukraine will inevitably default on this payment?
Well, Ukraine was pretty much saved by the recent deal with hedge fund Franklin Templeton in late August. Now, that's been a very tough negotiation with that hedge fund. To some extent, they're kicking the problem into the future with that hedge fund, but I think that was probably the best deal to be done. Now, we've got this euro bond repayment with Russia coming up. If the negotiation with Franklin Templeton was difficult, then the negotiation with Russia is going to be a lot harder. We've already seen, as you say, the Siluanov come out, and his opening gambit is very much to play hardball on this. He's saying that Russia are not going to move, and that may well be a possible outcome. Although I suspect they will start to bend as the date approaches for the euro bond to be repaid. I think what happens from now is very much dependent on the IMF, who have a major part to play here, and particularly how they categorize the bond, whether they categorize it as an official debt or whether it's a private debt. And that's important because the IMF will not lend to a country, and they're lending obviously a lot to Ukraine through the bailout package at the moment. They'll not lend to a country that is in debt to a sovereign debtor. So I think the most likely thing is a restructuring of the debt. And yes, we've seen this hardball comment from Siluanov first in Russia, but I think when it comes down to it, I think it will be in Ukraine's best interest, in Russia's best interest, to come to some sort of deal on the debt, for Russia to take some sort of haircut on what is due, maybe some sort of restructuring, as they did with Franklin Templeton, which involved a higher interest rate being paid. So I think that's still the most likely outcome, but we're going to have to see how this plays out.
Thank you, Philip. Be sure to check back with Dugoscopy for more updates throughout the week. Goodbye for now.